When you think about the guts of modern healthcare, what's the first thing that comes to your mind?
Oh, it's always the dramatic stuff, the surgeon under the bright lights, the MRI machine,
Yeah,
the Grey's Anatomy version of it all.
exactly. But you never really picture the boring stuff, the logistics.
Yeah.
I mean, the vans driving samples across state lines at 3 in the morning, or the machines spinning away in some building by an airport.
The plumbing, it's essentially the plumbing of the whole
It
system.
is. But today we're looking at a company that's arguing that the plumbing is actually where the real revolution is happening.
Well, if that plumbing gets smarter and faster, the whole house changes. And that's exactly what we're seeing.
So let's get into it. We are doing a deep dive on Quest Diagnostics. Ticker is DGX. Today's Tuesday, February 10th, 2026, and they just dropped their Q4 2025 earnings this morning.
And this one was surprisingly interesting, not your typical lab company report.
No, it really wasn't. Our mission here is to look at how this, legacy company, the people you just think of as the blood test people, is trying to turn itself into a high-tech, consumer-facing data giant. We've got the transcript from the earnings call, the slide decks, all the tables.
And honestly, the numbers this quarter tell a story. It's a story about a massive pivot in their strategy that's finally starting to bear fruit. It's not just about drawing blood anymore.
Okay, so let's set the stage. The snapshot numbers from this morning. Quest posted Q4 revenue of $2.81 billion.
Which is up 7.1% year over year.
That's a pretty healthy number for a company this size, isn't it?
It's a very healthy clip. For a mature business like this, you'd usually expect, low single digits, 7% tells you something new is firing?
And for the full year 2025, they broke $11 billion in total revenue. Adjusted earnings per share were up double digits, and the market loved it.
Oh yeah, the stock at a 52-week high right away.
But we both know the stock price is just a reaction. The real story is in their guidance for 2026.
It is. They're projecting revenue between $11.7 and $11.82 billion. That is a lot of confidence. And if you listen to the CEO, Jim Davis, on the call, that confidence is coming from what he kept calling multiple growth engines.
That phrase jumped out at me too.
Yeah.
Multiple growth engines. Because for decades, Quest basically had one engine.
Right. Doctors order tests, Quest runs them, and then you hope the insurance company pays. It was the sick care model.
You feel sick, you go to the doctor, they confirm it with the test.
Exactly. And now they're pushing so hard into well care, which brings us to the first big pillar in this report, the consumer revolution.
This is the part that feels the most real to me. I mean, a few years ago, I couldn't just decide I wanted a comprehensive blood panel done just because I was curious.
You'd have to beg your doctor, and they'd probably say no.
Right. Now, you just go online. A lot of people are doing that. They specifically highlighted their platform, questhealth.com.
And they put a number on it. It's now a $100 million run rate business.
$100 million, just from people ordering their own tests.
It's huge, and it's growing at about 35%. I mean, that's tech startup growth inside this, legacy healthcare company.
But okay, $100 million is still a small piece of an $11 billion pie.
Yeah.
Why does Wall Street care so much about this particular slice?
Two very simple words. Cash pay.
Oh, of course.
Think about all the friction in the old model. Quest bills, insurance denies, Quest appeals. They get paid maybe 90 days later. There's a copay the patient never pays.
The bad debt.
It's a huge expense. But with this, you put your credit card into the website. They have the money before you even show up for the blood draw.
It's clean. The margins have to be better.
Much cleaner. And they're building this whole ecosystem around it. They mentioned partnerships with WOpe, with Oura Ring.
I love this strategy. It makes so much sense. My Oura Ring gives me my biometrics, like my heart rate, my sleep quality.
But it's surface level. It can tell you that you slept poorly. It can't tell you why.
Exactly. Is my cortisol high? Am I low on iron? The ring doesn't know.
And that's the gap Quest is filling. They're connecting the biometrics from your watch to the biomarkers in your blood. They even launched a new product for this called the Elite Health Profile.
Elite Health Profile. Sounds intense.
It is. It's over 85 different biomarkers, hormones, metabolic stuff, micronutrients. It's for that, biohacker crowd or just people really serious about longevity.
So you're shifting from being a patient to being a consumer. You're buying your own data.
Exactly. But let's pivot. Because while the consumer stuff is flashy, Quest is still a very serious medical science company at its core. And they had some major updates in advanced diagnostics.
This is the super high margin, high science stuff. The two big headlines were Alzheimer's and cancer. Let's start with Alzheimer's.
Yeah, a disease that's been historically just awful to diagnose early. You either needed a very expensive PET scan or a spinal tap.
Yeah, I'll pass on the spinal tap. Thank you.
We all would. So Quest has been working on these blood-based tests, and the huge news this quarter was a study they published in Neurology Clinical Practice.
That's a top-tier journal.
It is. And the study showed that their blood test, AD Detect, is accurate enough to be considered confirmatory.
Confirmatory. That word matters a lot, doesn't it? That means it could replace the PT scan.
That's the goal. Imagine the implications for access. You might live 3 hours from a P scanner, but you probably live 20 minutes from a Quest lab in a local plaza.
It just democratizes the whole thing.
And it saves the healthcare system thousands of dollars for every single patient. So insurance companies get on board pretty quickly. It's a win all around.
Okay, then there's cancer. The buzzword on the call was MRD.
Minimal residual disease. Yeah, this is probably one of the hottest fields in all of oncology right now.
Can you break that down for us? What is MRD?
So a patient has surgery to remove a tumor. The huge looming question is always, did we get it all? MRD is about using a blood test to hunt for microscopic fragments of tumor DNA long before a new tumor could ever show up on a scan.
Like finding a needle in a haystack.
Which is literally why they named their main test Haystack. It's for colorectal cancer. But the new thing they launched, the one they were excited about on the call, is called Flow MRD.
Okay. How is flow different?
Haystack uses genetic sequencing. Flow MRD uses something called flow cytometry. It looks at the physical cells themselves. It's for blood cancers, like myeloma. But the real game changer here is just one thing: speed.
How fast are we talking?
3 days.
3 days.
Compared to like 2 or 3 weeks for the genetic tests. For a patient waiting on those results, that's an eternity.
That's the difference between starting your next treatment on Monday or waiting until next month.
Exactly. And it's so sensitive, it can spare patients from needing painful bone marrow biopsies. So again, there's that theme. Replace an invasive, expensive procedure with a simple blood draw.
It really feels like they're trying to make blood the central medium for all health data.
I think that's fair. But to do that, you need massive, massive volume, which brings us to their scale strategy.
This is where the numbers on the call just got enormous. They're not just waiting for doctors to send the business. They are actively taking over entire hospital lab systems.
It's a huge trend. Hospitals are realizing that running a cutting-edge lab is complex, and it's not their main job. Their job is patient care, so they're just handing the keys over to Quest.
They mentioned 2 huge deals, Corewell Health and Fresenius.
Corewell is a major health system in Michigan. Quest is taking over lab operations for 21 of their hospitals. And Fresenius is the world leader in dialysis. Quest is now managing testing for 200,000 of their patients.
That sounds like a guaranteed home run. You just lock in all that volume.
Mm-hmm.
But the CFO, Sam Samad, he threw a little cold water on that. He said these deals will actually lower their profit margin in 2026.
Right, and this is the key thing for investors to understand. I'd call it the fixer-upper strategy.
Like flipping a house.
Precisely. When Quest takes over a hospital lab, that lab is usually not very efficient. Their margins are probably in the low single digits.
The Quest is buying low-margin revenue.
In the beginning, yes. And that drags down Quest's overall corporate margin. But then they spend the next year or two bringing in their automation, using their purchasing power to get cheaper supplies, optimizing everything.
They renovate the house.
They renovate the house. And by 2027, they expect that same lab to be running at low teens margins. So you take a short-term hit for a long-term, very sticky revenue stream. They expect this collab revenue to hit almost $1 billion in 2026 alone.
$1 billion.
Yeah.
But managing all of that, 21 new hospitals, all those patients, plus the consumer business, how do they keep the wheels from falling off?
AI and automation. They have this program called Invigorate.
Which sounds like the most corporate buzzword ever.
It does, but it seems to be working. It delivered 3% in cost savings, and they're using AI in really practical ways.
Oh, like what? Give me a real example.
Logistics. They have this huge fleet of couriers picking up samples. They're using AI to optimize all the routes in real time, like a super specialized version of Waze. That saves gas, it saves time.
Okay, that's tangible.
Or in the lab itself, they talked about using digital pathology for cervical cancer screenings. Instead of a human staring at a slide for hours, an AI pre-screens it and highlights the 3 spots the pathologist really needs to look at.
It makes the expert faster, superpowers them.
Exactly. But this kind of tech upgrade costs money. They spent a good bit of time on the call talking about something called Project Nova.
What's Project Nova?
It's a huge partnership with Epic, the medical records company. They're rebuilding their entire billing and ordering system to be deeply integrated with Epic's platform.
Why is that so important?
Because basically every major hospital system in the country runs on Epic. To be seamless, you have to speak their language. But it's a massive investment. They said it's going to cost them about 25 cents per share in earnings in 2026.
So 2026 is an investment year? They're spending now to be more profitable in 2027 and beyond.
That's the whole thesis. But, even the best laid plans can run into a snowstorm.
The weather.
Mm.
I always roll my eyes when companies blame the weather.
I do too, but for them, it's actually real. If the roads are iced over, the couriers can't make pickups. People cancel their doctor's appointments. And they said January 2026 had significantly worse weather across the U.S. than the year before.
So Q1 is already starting with a bit of a
A
headwind.
literal headwind. It just reminds you that for all the AI talk, this is still a physical business.
And there's another headwind, one that's more political, PAA.
Ugh. The Protecting Access to Medicare Act. This is the government's mechanism for setting lab test prices, and they're always trying to cut them.
So where does that stand now?
Well, the good news is Congress passed a temporary fix, no more cuts through the end of 2026. So pricing is stable for this year,
It's a temporary win.
a very temporary one. The underlying problem is that the government sets these market rates based on flawed data. Back in 2017, less than 1% of labs in the country actually submitted their pricing data.
Less than 1%. You can't base anything on that.
You can't. It skewed the results and led to unfair cuts. So Quest is now lobbying for something called the Results Act.
And what would that do?
It would force the government to use a statistically valid third-party database to figure out what the real market rates are. Use actual data.
What a concept.
Right. They're trying to get a permanent fix so they don't have to go through this political drama every single year.
So when you take a step back,
Mm-hmm.
you have a company navigating literal and political storms. But at its heart, the business itself seems to be changing.
That is the big takeaway. This is not just a utility anymore.
It's becoming a platform business.
Absolutely. They're consolidating the hospitals to build scale, they're digitizing the labs to build speed, and they're opening the front door to the consumer to build a brand.
It really changes how you see that little Quest Diagnostics sign in a strip mall. It's not just a place to get a blood draw.
Yeah.
It's a data hub connecting my Aura ring to my hospital records.
And that $11.8 billion projection for next year suggests that the strategy is actually working. They're building a real network effect.
So here's a thought to leave everyone with. We talked about connecting biometrics from your watch with biomarkers from your blood. If your watch tells you something is off, and a blood test can tell you why in just a couple of days without needing a doctor's permission slip, are we finally getting to the era of real-time human maintenance?
A check engine light for the human body.
Exactly. Except this one actually tells you which part needs fixing instead of just flashing an ambiguous orange light.
That's the dream, isn't it? And based on this report, we're getting a little bit closer.
Something to think about. Thanks for listening to this deep dive into Quest Diagnostics.
Stay curious.